Okay, beautiful people. It's your mentor Dumiraji. If you are here, welcome to today's video, where we're gonna be mainly tackling the following things. We're gonna be doing more of a market breakdown session. So as you all saw that, okay, on the previous video that I posted, I didn't do it. I didn't do a live thing, meaning that okay, I didn't analyze the market for you. It was more of diagrams and everything. So on this video, guys, I'm gonna be doing what? I'm gonna be mainly focusing on doing this thing on the chart so that you guys can be able to know how to implement this thing. So on the previous video, we spoke about trends, a trend actually. I don't know if it's a trend or trends, but we spoke about the properties and rules of a trend. That okay, when you are on, if you find yourself on a bullish trend, right? If you find yourself on a bullish trend, there are some things that you need to look forward to doing. So this is what we currently have in here. So this is our uptrend, right? How can you confirm that this thing is an uptrend? We have what? We have a high, we have a low, we have a low, we have a high, we have a low, we have a high, and then we have a low instead. So technically, you guys should be able to know that, okay, whenever we have a structure like this, like I said, on an uptrend, the market will always do it. The market will always break high highs. So these things will SMC people and even peer price action people. You break a high, you grab your liquidity within this range, and then technically within this range here, you're going to take your entry points on a demand level. You understand? So a demand level is a place where you're going to be taking your entry points, meaning that, okay, your targets will be at the previous high. So now what happens is that, okay, you're going to also wait for the market to break this high and then give you what? A break-off structure. So which means you're going to have a top US here. And then you're going to grab your liquidity, and then you're going to come back to the downside to respect your low. You understand? You're going to come back to the downside to respect your low. You understand? So this means that, okay, now what we're going to do is that, okay, we're going to simply look for a breakout structure within this level. And then what will happen is that, okay, we need to do what? We need to wait for the markets to do it, to push to the downside, and then come and respect this low. You understand? So if the market respects this low, we are looking forward to taking our take profits within that range here. But then if the market does not respect this low here, if the market does not, okay, let me talk about this one first. If the market does not respect that low, this means that, okay, something will happen. So what will happen is that, okay, the market will have to change. Possible thing that might happen is that, okay, we might change our structure from a bullish structure to a possible bearish structure. You understand? So that's something that you need to be able to know that, okay, if you have a structure like this pushing to the upside and then the market starts facing down, we might be able to introduce ourselves to a change of character. Okay, minor things. And then the other thing that is very important, guys, is that, okay, if the market respects this low and then the market fails to break this high here, if the market fails to break this high, if the market fails to break this high here, this basically means that, okay, we cannot confirm that we are on a bullish trend. Till the market takes out this high here, till the market takes out this high here, we can confirm. But if the market fails, so which means if the market creates something like this, we won't be shocked. We won't be shocked seeing the market taking out this lows. Why? Because of failure of taking out this high here. Why am I saying this thing? Because of every time we are on a bullish trend, we break highs and respect lows. Okay, enough with an uptrend. So now let's go visit what we call a downtrend. So on a downtrend, like I said, we have rules and properties also on this phase here. We have our rules and properties. We have the rules and properties on this phase here. So let me just do this. So this is what we're currently having here on our bearish movement here. So we can see that, okay, it's a bearish movement. How? We have what? We have our low, our high, our low, our high man, our low, our high, our low, and then our high here. And then how can we confirm the rules? The rules say that, okay, we're gonna break lows, which means that, okay, we have a bottom BOS, and then we grab our liquidity, we come to our supply level. We come to our supply level. You understand? And then we're gonna go again and do what? Break this low here. Gonna break this low here. And then we're gonna come again, do what? We're gonna come again and respect that supply level here from this lower high. So those are the rules and properties of this trend here. So which means that, okay, from this phase here, we're expecting the market to do it. We are simply expecting the market to come take out this low here. We are simply expecting the market to come take out that low here, which means when it takes out that low, we have what we call a BOS. But if the market failed to take out this low here, yet it respected that POI. If the market fails to take out that low, this means that okay, there are high chances of the market to do it, to start changing its character and then push bullishly and take out all this high here. So the same thing with the example where the market fails to do what, where the market respects that point of interest here, and then it tends to do what? It tends to switch from that bullish trend to from the bearish trend to a bullish trend now. So it happens, guys, that okay, supply won't be strong to hold. So it happens that okay, sometimes you won't hold, sometimes you hold. You can't always beat yourself out for something that you don't have control over. So this is the exact structure of a downtrend. So let's just go visit gold now. Let's go visit gold now. Let me just remove this and let's go visit gold. So this is gold now. Okay. So one thing that I want you guys to firstly focus on is what the bullish trend from this guy here. So let me just cut the charts from before it starts to drop. So there. So as you can see that okay, gold was on a bullish trend, right? There was any series of what? A high, a low, and then you have a high, you have a low here, a high, a low, a high, a low, and then we have this one, highs and lows here. But I want to find out this one here. A high, a low, and then a high somewhere here. Okay. So this means that okay, we break highs and respect lows. So one thing that I want you guys to be able to be aware of is that okay, this level here, the most interesting level that I want to talk about. Okay, so let me just put this guy here. So this means that okay, technically, if you move to maybe a 1 hour time frame, you move to a 1 hour time frame, this is the current structure we have. Instead, we can technically see that okay, this is your high, and then this is your low. Okay. So you can see that, okay, now the market managed to do what? The market managed to take out this high here, giving you what? A top break of structure. Give you what we call a break of structure. Meaning that, okay, technically we are gonna use this guy as our POI here because of he's still unmitigated. Let's say we use this guy as our point of interest, as our demand level. And then one thing that is very interesting is what? The fact that okay, we have this outside liquidity here, which means some sort of inducement before our point of interest. So this thing is very what? It's very important. Okay. So let's go back to maybe our 4 hour. Okay, let's go for our 3 hour time frame. Okay. So this is what we're currently having now. So okay, let's allow the market to push down. So as you can see that okay, the market fails to do what? The market fully fails to respect our point of interest. So this means that okay, we have what? A demand failure here. We have what we call a demand failure. So let me just bring that guy back. Okay, as I was saying that okay, we have what we call what? We have what we call a demand failure within this level here. So we have what? A demand. Okay, let me not write it and just show by this guy here. Let me just show by this guy here. Okay, let me just do this now and then come here. So we have a demand failure here. Okay, let me just make this guy red. So we have a demand failure here. Okay. So now, since we have this demand failure here, if you move to your daily time frame, your D1 time frame, this 1 day time frame. Okay, if you move to a daily time frame, you can see that okay, we managed to do what? We managed to take out that low then, which means that okay, now there are high chances of us to do it. There are high chances of us to start moving bearishly. So now we're gonna look for something that is very interesting. So from this level here, we're gonna enter not at our order block, but using our breaker block. Instead, we're gonna enter using our breaker block. We're gonna enter using our breaker. We're gonna enter using a breaker block. So which means that okay, on a D1, on the D1 time frame, we're gonna enter within that level there. Understand? So that's where our entry point is going to be. So because such movements, when the market impulses like this, there are low chances of the market to come to your point of interest. So my advice, look for a breaker block. Okay. So now let's play the market. So the market pushes to the upside. Okay, let me just fix this guy because the week was supposed to be there. Let me just fix him a bit because this entry point was a beautiful entry point. It was a weak entry point. You can see that, okay, it just tapped and then started moving to the downside. Okay. So which means now if it breaks this low, if the market comes and takes out this low here, this liquidity here, if the market comes down and takes out this low here, this means that, okay, we are going to be on a bearish trend. Okay, so the market plays around. So let me just reduce the speed, plays around till it does what? Till it takes out that low. So as it takes out this low, we can see that it breaks and closes outside, meaning that, okay, we can confirm that, okay, we have what? We have our first break of structure of a downtrend. And then we go to our 1 hour to look for what you call our weak entry point. You understand? We're going to use our weak entry point. So let's just go to, this is our H1. And then, okay, let's go to 2 hour time frame. To our time frame, we're just going to use this entry point. This can just be here. Then we're going to use this entry point here. Okay, so now let's go back to our daily time frame now. Let's go back to our daily time frame. Let's go back to our daily time frame now. So which means that, okay, our other block, which is be here, our point of interest will be at this level here. Okay. So now we can see all these beautiful things that are here. We have all this lot of things, your imbalance, and then you also have your buy side liquidity here. And then you also have your buy side liquidity within that range. And your buy side liquidity there. So this will be considered as your supply level. So this will be provided as our supply level. Okay, now let's play the chart and see. So now the market pushes to the upside. So let me just make it a little bit fast, guys. So now the market pushes to the upside. And then one thing I love about it is that, okay, it leaves you with this buy side liquidity first, which strengthens your POI. And then once it goes again, it taps into your POI and then start to do what? To push bearishly so. You understand? Like I said, on a downtrend, we break lows and respect highs. You understand? As you can see that, okay, this high was respected. So now we're going to be looking forward to taking out this low here. We're going to be looking forward to taking out this low here. Okay, so which means there's liquidity there till the market takes out this low. Now we can confirm that, okay, we have what? We have a break of structure here. So which means we have what? A break of structure within this level here. So it's a break of structure, graph of liquidity, point of interest. So this basically means that, okay, this supply level that was here, it was respected, right? So we have a break of structure. So we're going to go to maybe a 2 hour time frame and then look for a proper POI. So as you can see that, okay, we have what? We have this guy here as our POI. We have this guy here as our POI. After all these imbalances and everything, he remains to be our POI. So if you go back to our 1 day time frame, you'll see that, okay, this is what we're currently having. And then, yeah. Okay, so now this means that, okay, we're going to have what? We're going to have our buy side liquidity within this range. And then you're going to have your price efficiency here. Your balance or fair value gap or whatever we're going to call it. And then you're going to have this guy here. So which means you're going to take our entry points there. Okay, so now the market pushes up beautifully so, taps into our point of interest, and then this means that, okay, we're going to be looking forward to doing what? We're going to be looking forward to taking out this sell side liquidity here. Sell side liquidity meaning a low. Sure, your mentors by now should teach you that, okay, a low, before it gets broken, it's liquidity. Okay, so now come and do it, push to the downside, and then already this means that, okay, the liquidity is grabbed, but doesn't mean that, okay, a break of structure. A break of structure only occurs when the market breaks a low and closes below. So now the market finally breaks a low and closes below, meaning that, okay, we have what we call a break of structure at this level here. So now We are also gonna come to this level here, and then put this guy at center, and then look for a point of interest. Let's go for a 3-hour time frame. Let's go look for a pure eye, beautiful pure eye here. We have this beautiful pure eye here. Okay, not yet mitigated. And then let's go to our. I have this error, guys, of writing this guy as one D1, and it's not supposed to be written like that. So which means that okay, we're gonna have something like that. So now let's see what's gonna happen. Okay, let me just write supply here. Let me just write supply level, and then yeah, let's see what the market is gonna do. So now, okay, now the market did what? The market rejected before our POI. As you can see that okay, the market rejected in front of our POI. So now we want to know the cause. Why did the market reject within this level here exactly? Understand? So as you can see that okay, the market came down pushing, creating an impulse, correction, impulse, correction, impulse, correction, impulse. So these guys that are here, they call them internal breakout structure. Understand? Which is mainly known as a minor BOS. You understand? So sometimes the market respects minor breakout structures, meaning that okay, if you're on a bullish trend, on a bearish trend, you have something like this. So sometimes the market will come here, respect this level, tap into it, go down, come tap into this guy, and then come down, and then finally tap into this guy here, and then push to the downside. You understand? But this is not always the case, guys. This is not always the case. But then sometimes what happens is that okay, the market comes here, it can literally come to this guy, tap into him and go. And then sometimes it can come to the second one, tap into him and then fully. Then sometimes it can break all these two guys here without even respecting and then tap into him and leave. Sometimes he chooses one. Okay. So I just want us to focus on that for now. Okay, so now, which means there must be something within this range here. There must be some sort of a POI within this range here that can be able to tell us that, okay, oh, Tumelo, this is the reason why I changed here. So let's go to a 5-hour time frame. So on a 5-hour time frame, okay, let's go for a 6-hour now. Or I wouldn't say 6-hour has everything. 4-hour. Okay, let's use this guy here as our POI here. Let's use this guy as our POI. Okay, but let's go to an hour, 2-hour. I'll check something interesting. Okay, yeah, it's fine. So let's go back to our 1-day time frame. Yeah, this is our 1-day time frame, and then as you can see that okay, the market fully respected that minor POI supply level, which means the top one won't really be valid. Which means this one there won't be really valid. So as you all can see that okay, at the moment, let me just explain this guy here. Okay, so we touched into that guy. So now, guys, this is where everything becomes interesting. The market has to come take out this equal lows here. As you can see that okay, we have got equal lows, which means what we call sell side liquidity. So you have that sell side liquidity there that the market needs to come take out. Failure of taking out that sell side liquidity can cause some problems. And automatically, once it takes them out, we have a breakout structure. So you took your sells, and then the market does what? Pushes to the downside, and then it fails. It fails. It has not yet taken them out. Take profit hit, but it has not taken out the sell side liquidity, which means we might have some problems now. We might face some problems now. Why? Because of this guy was not respected. Okay, so which means that okay, wherever the market is gonna go, and as much as the market has not yet respected that level, it needs to come back and respect it. Which means if it can go for 2 years, you have to come and clean all the sell side liquidity that is here. And then one thing that I want to talk about here is that okay, there's something that is very interesting. Something that is very interesting. As you all can see that okay, we had we're still trading within this swing high, and we're still trading within this swing low here. Okay, understand? We're still trading within I don't know how I'm gonna put this thing, but it's fine. Let me just remove this one now. And we're still trading within this swing low here. So this is our swing low, and then this is our swing high. So this basically means one thing. We have to wait for the market to break the low or the high to confirm which trend are we going to be on. You understand? Okay. So now, which means if the market, we are already on the downtrend, but we have not broken the low to confirm our downtrend strength. So now, let's see what's going to happen. So now the market plays around, fails to break that low still. And then I'm not going to trade anything in between. Why? Because of we are still trading within the swing high and swing low. So I'm still waiting for the market to take out one of the guys to show me where it's going to go. And don't forget that we have this sell-side liquidity thing. Okay. So now, as you can see that, okay, the market is approaching, I don't know what, but yeah. And then the market finally does what? The market finally takes out the high. So once it takes out the high, it comes to our mind that, okay, now we need to start doing what? Now we need to start pushing on a bullish trend. Meaning that, okay, we're going to start doing something like this. Okay, maybe because I have to be honest with you guys. So we're going to have this guy now as our swing high, because this is what essentially is the only high that we have there. We're going to have this guy as a high. That's our swing high. And then we're going to remain this guy as our swing low. Now let it be our swing low. Okay, so that will be our swing low and swing high. So which means we're trading within this range here. So most people, what happens is that, okay, I'll show you something here, that if you use the rule of premium and discounted and equilibrium phase of the market, you'll understand something interesting. So this is the premium, and then this is the equilibrium, and then this is what we call the discounted price. Meaning that, okay, here we are on a bullish trend, and this means that, okay, demand is in control. You're not supposed to take any entry points below the equilibrium price. You understand? And then always on your premium price, look for a change of character. Simple. So now we are able to see that, okay, we have what? We have this demand level here. I mean, supply, sorry about that. We have this supply level here. So this will be our supply level that can be able to carry out to the downside. So I just want to move this guy a little bit to the side. So now, just want to talk about this thing now. So which means that, okay, we can expect the market to simply do it. We can simply expect the market to come tap here and then push to the downside to maybe this POI here and then start giving us those buys. Why am I recommending that POI? Because we had this internal breakout structure here. We had what? This top POS here. We had this top breakout structure. And then, yeah, we can use either him or him. Okay, so now let's see what happens. So now the market does what? The market pushes to the upside briefly, taps into our POI, and then it starts to do what? It starts to drop. So like I said, let's say we use this guy as our POI here. That's our demand level. Let's say we use this guy as our demand level. Okay, so now the market taps there. Okay, breaks a little bit. Guys, when the market breaks your POI, it doesn't mean that the POI is invalid. Always look for confirmation. I'm sure there's confirmation within this trade here. Okay, so it taps and then it starts to do it, plays around, and then it takes out the low. So when it takes out the low, everything becomes interesting now. When it takes out this low, this means that, okay, this bullish trend that we thought we were gonna be on, there are high chances of itself not to. Why? Because of, don't forget that, okay, we still have this equal lows here that the market needs to take out. Okay, but then once it failed to respect this guy here, see, so the market failed to respect this high here, which means we have a demand failure. So we have this demand failure here. We have this demand failure here. So we usually have this demand failure, means that, okay, and don't forget, guys, we are still trading within the swing high and the swing low. The only thing that you shouldn't forget is that we are still trading within the swing high and the swing low. The only time this uptrend can become invalid is when the market breaks the low or the high. Let's not forget that. So now what we can start assuming is that, okay, since we have such things, This means that okay, we have what? A breakout structure here, a bottom BOS, and then this basically means that okay, we're gonna have what? Maybe a possible point of interest on a 8-hour time frame. We might have a possible POI within this range here. Let's identify this one first. Let's identify this POI, and then let's go again to a 10-hour time frame. Look for something. Okay, same POI, and then 5-hour time frame. The 5-hour time frame, I'll just identify this breaker block here. Just identify this breaker block here. Okay, so let's go back to a time frame now. So we're gonna have two things here. And so you guys, if I'm taking a while to answer your questions or anything like that, okay, so that I wanna give you guys quality things. Okay, let's just move this guys a little bit here. So which means now, guys, the only thing we're targeting for is the lows. Okay, we have a supply level. We have a supply level here, and then we have a breaker block here. Breaker block. Small letters. Breaker block. And then center, yes, and then I want him to be red because it's in a formula of that guy. Okay, so now the market does what? The market pushes to the downside, and then it comes back. Once it comes back, it needs to respect one of the guys. So it taps into the breaker block, it respects it, and then taps into the POI, and then does what afterwards? It pushes to the downside afterwards. Okay, so which means that okay, that breaker block, it acted as some sort of imbalance instead, which is fine. So now this supply level has been respected. So which means that okay, let the market push to the downside. So as the market pushes to the downside, as we can see now that okay, guys, we are currently at the swing low. The swing low has been taken out, and then the sell side liquidity also has been taken out, which means that okay, now everyone has a right to tell us that okay, you know what, gold is on the bearish trend. Everyone has a right to tell us that okay, at the current moment on gold, what we can start looking for is what we can start looking for a breakout structure on this low here, and then we can start looking for a point of interest within this level here. Now I can say that this one is good. So this one can currently have. So now we know that okay, either you're gonna let this guy be a buy side liquidity or something. So that's what you're currently having. So that's what you're currently having. So yeah, guys, that was me doing a market breakdown session with you guys. Thank you guys for listening. Thank you guys for joining this session. And then yeah, till we meet again.